Hello and welcome to Chart of the Day Cafe for Thursday, June 7th, 2018. Disclaimer quickly, trading stocks is a high level of risk and viewers should complete their own due diligence on any stock or underlying that they intend to own. 100% of the content of this video and communique is intended for journalistic and educational purposes only. This video and all indicators, strategies, and articles herein should not be construed as investment advice, not making any recommendations, always for your further homework. Good morning, Sue here. Hope you've had a great week so far. I'm filming this at about 8 a.m. on Thursday morning. The futures look to be slightly in the green, so we'll see what the day brings. But with that, let's get into today's video. If you know me, you know I always start my videos off with a look at the Russell Index. Why? Because I always want to make sure that before I put a new name forward for my watch list, that I'm putting it forward in a rising market environment. And for that, I use the IWM, which is the ETF that represents the Russell 2000. I choose the Russell because I deem it to be the most interest rate sensitive of the indexes. So I like to keep my processes simple. As long as the Russell is moving higher, I'm okay. So IWM, 5-year monthly chart. The only indicator on my chart is this blue line, which is the 8-day EMA, which I use as my guide. You can see the candle for the month of May was a bullish one. And here we are so far for the month of June after several months of back and forth indecision. As I pointed out on Tuesday's video, I prefer to see, with regard to the candle for the month of May, I would have liked to have seen more volume. Like this candle here that pushed us up and out of this range. See the volume increase? And the nice bullish candle that started this uptrend. Don't see that here. So I want to be aware of that, but having said that, price strength continues, so we'll see what the month of June brings, but so far so good. I am going to put my drawings back on, and I apologize, the chart gets a little cluttery. I am ignoring these lines down here for now. This is long-term support, medium, and more short-term support, this pink line. The one that's really important to me is this black diagonal line. It held price in through all of 2017, where price lifted up and over that black diagonal line. But in February, it sunk below. The next month, it couldn't close on the monthly above it, nor could it close above it in April, but in May, it did. So I use this black diagonal as my guide quite a bit. There's the 5-year monthly. Let's switch it over to the 2-year weekly and take a look at how price looks on the weekly chart. Here's that same black diagonal line. As you can see, price on the Russell continues to look strong so far for the week, up and over the 8-day. Let's take a look at it on the daily. Yeah, price strength continuing. So here's our blue 8-day EMA, price strength continuing. So with that, we will be putting a new chart forward this morning. And the chart that I wanted to feature for you this morning is JP Morgan Chase & Company, ticker symbol JPM, trades on the New York Stock Exchange. Before I get into the chart, let me tell you a little bit more about the company. JPM is an investment banking firm. It's one of the biggest in the United States, along with Goldman Sachs and Morgan Stanley. I'm sure a lot of you are very familiar with the company. If you know me at Chart of the Day Cafe, I am all about the scores underneath my charts, and JP Morgan has an excellent value score, along with a forecasted earnings growth rate going forward of 16%. A current PE of 13.17, and it pays a dividend of 2.03%. So with that, let's get into the chart. We're looking at the 5-year monthly chart. You can see on the 5-year monthly had a slow uptrend until 2016, where it started to pick up, and it is still in that uptrend. The blue line on my chart is the 8-day EMA, which I use as my guide. You can see that it's stalled here a little bit, but it looks to be picking up. It struggled for the last 4 months, but so far the month of June looks to be shaping up nicely, and it's bouncing off this area of support. Going to move it away from the 5-year monthly to the 1-year weekly so we can better see how price is behaving. So we had a hammer last week, always nice to see, and it looks as though it wants to reclaim the 8-day EMA here. I think there's an interesting entry point here and a small risk-reward ratio, which is what I like to see. So like the formation here, this consolidation in a continued strong market environment, I would look for JP Morgan to perhaps go higher. So here's the daily. Here's the blue line, which I use as my guide. I know everyone has their own way of doing things. What I like to see is price the 3 EMA cross the 8 EMA. So I like the way it consolidated here for several days, and I like the pickup. Should it continue, I would be looking for an entry when it hits my green circle. So I'm going to blow it up. You can see that it's just about to get that cross, the 3 crossing the 8. I want to see a little more confirmation and a move into my green circle, but I like JP Morgan here. Along with our new watch list pick, I also like to take a look at the sector that it's in, and for that we're looking at XLF, which is the ETF for the financial sector. 5-year monthly chart, much like JP Morgan Chase, consolidated here for a number of years and then in 2016 took off. Also been consolidating. Again, this is the monthly chart, so these are monthly candles. We had a doji indecision at this area of support, but so far for the month of June, it looks like it's being resolved to the upside. We'll see if that can continue, but good to see. I also like to spin over to FinViz to see if I've got analyst support for my new watch list pick. And as you can see, for the most part, favorable coverage on JP Morgan Chase of late in 2018. I'm also going to include this article with today's video, 3 top bank stocks to buy in June. It's a Motley Fool article. I also like to take a look at seasonality, and for that I go to equityclock.com, a really excellent site. It's one of my favorites. I just love it. And I want to see seasonal favor for my new watch list pick. As you can see, JP Morgan comes into seasonal favor right about this time of year till the end of July. No guarantee that happens again this year, but always good to know. And so to quickly recap, let's go back and check the boxes. I started today's video with a look at the Russell Index, which I use as my proxy for the markets overall. And we note that the IWM, which is the ETF for the Russell Index, is up and over the 8-day EMA on both the daily and weekly charts. We looked at the sector that JP Morgan is in. XLF is the ETF we looked at. It's in an uptrend on the 5-year chart and looks to be lifting off an area of support. We looked at the chart for JPM, the 5-year chart. It's in an uptrend overall on the 5-year and at an area of support and possible price strength continuation. Emphasis on possible. It's got a great value score. It's got a good growth score with a forecasted earnings growth rate going forward of 16%, a current dividend yield of 2.03%. It does have that 3 and 8 EMA cross that I look for, but just. I want to see more follow through today. Seasonality in its favor, analyst support, insider buying, current PE of 13.17, and it looks as though their next earnings are on July 13th. Thank you for watching today's video. As a reminder, they go out every Tuesday and Thursday morning. Have a great weekend, and I'll see you here next Tuesday.